Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Global markets grappled with a mix of economic data surprises, geopolitical uncertainty, and shifting central bank expectations. In the US, equities stumbled as weak economic data fueled consumer spending concerns, while European stocks continued their 2025 outperformance. Japan's markets struggled with a strengthening yen, while Chinese equities gained momentum on tech optimism and signs of a more business-friendly regulatory approach. Commodities also made headlines, with gold briefly touching record highs. Let's dive into the details. After touching new all-time highs early in the week, US stocks reversed course, weighed down by concerns over consumer spending, inflation, and potential new tariffs. The S&P 500 and Nasdaq Composite fell 2.24% and 1.1% respectively, while the Dow Jones Industrial Average lost 118 points, losing 2.5%. Investor sentiment deteriorated late in the week after Walmart's cautious outlook, which signaled potential weakness in consumer spending. The retail giant's 6.53% decline on Thursday contributed to broader market losses, particularly in consumer discretionary stocks. This followed the previous week's disappointing retail sales report, which showed the biggest drop in nearly 2 years. S&P Global's flash US Composite PMI fell to a 17-month low of 50.4, dangerously close to contraction territory. Most concerning was the services PMI, which slipped to 49.7, indicating a decline in activity. The data heightened fears of a slowing economy, exacerbated by lingering inflationary pressures. The latest Fed minutes revealed policymakers remain cautious about cutting interest rates too soon, despite cooling economic growth. Fed Chair Jerome Powell reiterated that more progress on inflation is needed before considering rate cuts. European equities held steady despite political and economic uncertainty. The STOXX Europe 600 index managed a 0.26% gain, with markets navigating a mixed economic landscape. Italy's FTSE MIB rose 1.17% and led the way, while Germany's DAX and the UK's FTSE 100 lagged with losses of 1% and 0.84%, respectively. Eurozone PMI shows stagnation. The Eurozone Composite PMI held at 50.2, signaling near stagnant growth. Germany saw modest expansion, while France's output declined sharply. UK inflation and wages surprised to the upside. UK CPI accelerated to 3% in January, from 2.5% prior, driven by transport and food costs. Wage growth exceeded expectations, with average earnings up 5.9% year-over-year. Retail sales rebounded +1.7% in January, though consumer sentiment remains cautious. Stronger than expected inflation and wage data led traders to reduce bets on multiple BOE rate cuts in 2025. The Nikkei 225 declined 0.95%, and the Topix dropped 0.82% as a stronger yen at 150.4 to the USD, and rising Japanese government bond (JGB) yields weighed on investor sentiment. Economic data fuels rate hike speculation. Japan's core CPI rose 3.2% year-over-year, exceeding expectations. Q4 GDP expanded at an annualized 2.8%, reinforcing views that the Bank of Japan, BOJ, could hike rates. Corporate Goods Price Index, CGPI, rose 4.2% year-over-year, exceeding expectations and reinforcing the case for BOJ tightening. Alibaba, AI optimism, and policy shifts boost sentiment. Chinese equities rallied, led by tech stocks. The CSI 300 index rose +1%. The Shanghai Composite rose 0.97%, and the Hang Seng index jumped 0.79%. Alibaba's strong earnings and a high-profile meeting between President Xi Jinping and tech leaders signaled a more pro-business shift in policy, boosting investor confidence. Concerns remain about China's property sector and weak domestic demand, which could limit the broader economic recovery. Investors will be watching the Consumer Confidence Index on Tuesday, February 25th, for insights into consumer sentiment and spending trends. With consumer activity accounting for nearly 70% of the U.S. economy, any decline in confidence could signal weaker retail sales and broader economic slowing. Investors will be watching the second estimate of Q4 U.S. Gross Domestic Product, GDP, on Thursday, February 27th, to assess whether economic growth is holding up amid high interest rates. Any significant revision to the initial estimate could impact market sentiment, particularly regarding the strength of consumer spending and business investment. Investors will be watching the Personal Consumption Expenditures, PCE, price index on Friday, February 28th, as it is the Federal Reserve's preferred measure of inflation and could influence future interest rate decisions. A higher-than-expected reading may reduce the likelihood of near-term rate cuts, while a softer number could reinforce expectations for monetary easing later in 2025. Investors will be watching Germany's IFO Business Climate Index on Monday, February 24th, as it serves as a key barometer for business sentiment in Europe's largest economy. A weaker-than-expected reading could suggest slowing industrial activity, while stronger data may ease concerns about a potential recession. Investors will be watching the Eurozone Economic Sentiment Indicator on Thursday, February 27th, for clues about the region's growth prospects. With the European Central Bank, ECB, facing pressure to cut rates, signs of weakening sentiment could support expectations for monetary easing later in the year. Investors will be watching the GfK Consumer Confidence Index on Friday, February 28th, to gauge household sentiment amid ongoing cost-of-living pressures. A further decline could signal weakening consumer spending, which is critical for economic growth. Investors will be watching the nationwide house price index on Friday, February 28th, for insights into the UK housing market. As rising mortgage costs continue to impact affordability, a sharp drop in prices could point to a weakening economy. Investors will be watching the Tokyo Consumer Price Index, CPI, on Friday, February 28th, as an early indicator of national inflation trends that could influence the Bank of Japan's policy stance. If inflation remains persistently high, expectations for an interest rate hike could strengthen. Investors will be watching Japan's preliminary industrial production data on Friday, February 28th, to assess the strength of the country's manufacturing sector. A decline in output could signal weakening global demand, particularly from key trading partners like China and the US. Investors will be watching China's Manufacturing and Non-Manufacturing Purchasing Managers Index, PMI, on Friday, February 28th, for insights into economic momentum in the world's second-largest economy. A contraction in activity could heighten concerns about slowing global growth, while stronger data may indicate stabilization following recent stimulus measures. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.